So, what if the single biggest shift in global finance since the 1970s is happening right now, but instead of in Washington, it's happening on the blockchain? It's a really powerful idea from investor Tom Lee, and that's what we're going to unpack today, what he calls Ethereum's 1971 moment. Let's get into it. And there it is, right from the man himself. This is the core claim from Tom Lee. And you gotta appreciate how bold this is. He's not talking about some small market trend. He's drawing a direct line from Ethereum's rise to the moment the entire global monetary system got turned on its head. It's a huge statement, and it's the foundation for everything we're about to cover. Okay, so I know what you might be thinking. A 50-year-old decision about gold and a modern decentralized computer? What's the connection? It sounds like a bit of a stretch, right? Well, stick with me, because the link between these two is actually way more profound than you'd first imagine. To really get this thesis, we've got to jump in the time machine. We're kicking things off with Act 1, the year everything changed. To see where we might be headed, we first have to understand a really pivotal moment in our financial past. So here's your quick history lesson. Before 1971, the US dollar was actually backed by gold. In theory, you could literally trade in your dollars for a set amount of physical gold. The money was anchored to something tangible. But then, on August 15th, 1971, President Nixon went on TV and boom, that link was gone. Just like that, the dollar was a fiat currency, backed by nothing but trust in the US government. Now, this move effectively created what Tom Lee calls a synthetic instrument. The dollar's value wasn't tied to a shiny metal anymore. Instead, its power came from two things: trust in the US government and the huge financial ecosystem, basically Wall Street, that was built around it. This concept is absolutely central to the whole argument. At the time, a lot of people were predicting complete chaos. They figured a currency backed by nothing would just collapse. But what happened was the exact opposite. The dollar didn't just survive, it thrived. It became more dominant than ever before. So the big question is, why? Well, the results of this shift were just staggering. First off, get this. Today, 27% of all global economic output is priced in US dollars. That's a huge influence, especially when you think about how the US economy itself is about 25% of the world's total. The dollar's power started stretching far beyond America's borders. And it just kept growing from there. Eventually, over half, 55%, of all the money held in reserve by every central bank around the world was in US dollars. It basically became the default savings account for the entire planet. And here's the kicker: its role in global trade. An absolutely incredible 80% of all financial transactions today involve the US dollar on one side of the trade. It doesn't matter if you're buying oil in the Middle East or electronics from Asia. Chances are the dollar is the grease that's making the wheels turn. It became the world's essential financial infrastructure. All right, so we've seen how the dollar defied expectations after 1971. Now, let's pivot to Act 2, the Ethereum parallel. This is where we take that history lesson and connect it directly to what's happening in tech and finance right now. This slide really lays out the whole comparison beautifully. On one side, you have the dollar, backed by trust in a government. On the other side, you have Ethereum, backed by trust in math, in cryptographic proof and open source code. The dollar was powered by the old Wall Street ecosystem. Ethereum is now being adopted by Wall Street's new digital ecosystem. One became the bedrock of 20th century global finance. The argument is that the other is becoming the bedrock of 21st century digital finance. Okay, here is a really critical insight. When massive institutions, we're talking big banks, asset managers, are deciding what technology to build on, they don't really care about who's the fastest or has the coolest new features. Their number one non-negotiable priority is trust. It's reliability. They have to know without a shadow of a doubt that the system will not fail. And this, right here, is Ethereum's killer feature for Wall Street. 0. That's the number of times the Ethereum network has gone down ever in its entire history. Just think about that for a second. For a big institution, that perfect uptime record isn't just a nice little bonus. It's everything. It's the proof that this thing is truly institution grade. So that brings us to Act 3, the twin engines of adoption. Okay, so we've established that Wall Street trusts Ethereum because it's so reliable, but what are they actually doing with it? Well, according to Tom Lee's thesis, it all boils down to two huge, world-changing trends. First up is tokenization. This is this giant idea of taking pretty much any real-world asset, stocks, bonds, real estate, you name it, and turning it into a smart, programmable token that lives on the blockchain. And the second pillar is stable coins. These are really just digital dollars. They let you send money anywhere in the world 24/7 with a near instant settlement. And look, this isn't some fringe crypto idea. We're talking about the world's largest asset manager, BlackRock, openly saying that tokenization is the next evolution of financial markets. And when a giant like that decides to build for the future, they're building on Ethereum. Why? Because of that rock-solid reliability and its powerful network effects. Now for stablecoins, Lee has another brilliant analogy. He calls them the ChatGPT moment for crypto. Think about it. ChatGPT was the thing that suddenly made AI feel real and useful to millions of people. Well, stablecoins are doing the same thing for blockchain. They are the killer app for finance that's working right now. So where exactly is this ChatGPT moment taking place? Well, the vast majority of it is on Ethereum. The network handles over half of the entire stablecoin market. All of those digital dollars are whipping through its system, generating real usage, real fees, and real demand for ETH itself. What's so important to realize is that this isn't happening in some regulatory gray area. It's actually being encouraged. You've got bills in Congress to create clear rules for stablecoins. You have SEC initiatives pushing Wall Street to explore this stuff. And even the US Treasury sees digital dollars as a way to keep the dollar dominant in the digital age. The wind is at their back. All right, let's bring it all home. We're at the climax, the infrastructure play. This is where we tie the history, the tech, and these current trends together into one single powerful investment thesis. So let me ask you a question. After 1971, when the dollar was cut loose from gold, which do you think was the better investment for the long haul? Was it gold itself, the original asset? Or was it the infrastructure, the Wall Street firms, the banks, the exchanges that was built on top of this new dollar system? The answer, when you look at the returns, isn't even close. Gold did fine, sure, but the infrastructure plays, the things built on the new system, absolutely crushed it. The real value didn't go to the old asset, it went to the new system that was created to take advantage of it. And that is the key lesson from 1971. And that right there is the entire thesis in a nutshell. The argument is that Ethereum isn't just another coin or token. It is the core infrastructure. It's the new settlement layer, the new Wall Street for this emerging digital economy. And if history is any guide, the infrastructure play is the one that's set up for the greatest long-term success. So I'll leave you with this final thought. Is it possible that we're watching a once-in-a-generation upgrade of the entire world's financial operating system? A fundamental shift from the old rails to a new set of rails built on code and cryptography? Well, according to this thesis, the answer is yes. And it's happening right now, right before our eyes.